Walt, another week, another Tesla headline. We learned some news coming out of We Robot. The cybercabs, now known as Robotaxis, as Tesla's filed for a trademark for the term Robotaxi, were running on FSD 13. We found that out because bloggers and individuals attending actually asked questions. How about that? Ask questions and learn something. The market's divided. Where do you see this whole situation heading?
We gave Schobel props last week, but he was apparently not the only one asking questions. MKB, I guess we call him, Marcus Brownlee, who's a YouTuber, had 2 million people watch this podcast. I've been scouring for any incremental details everywhere about this event. He had a couple of good data points talking about the range for the cybercab, the robotaxi, whatever Elon ultimately calls it, being 200 miles. That was, I think, interesting information. He talked about, Grayson, no frunk, according to MKB. Last week on the podcast, you were like, no, there's a frunk in a trunk. No frunk, according to MKB at least. I don't know, what are they putting in the front of the car if there's no frunk?
I don't know, but you could put junk in the trunk because there's still a trunk.
Yes, that's fine. There's stuff, and I don't know, there's space in the frunk, so maybe he's even wrong about that. You'll ultimately be right. And then I think all of this ties together to one of his other data points that I pulled out from his video, which was, the 5 miles per kilowatt hour, I guess, relative to what very efficient electric vehicles get today. This is all about kind of getting the car smaller and lighter, using a smaller battery, but getting as many miles as possible with that, having the inductive charging to the extent this becomes, a usable fleet that's in the market. So, those were all, I think, incremental data points for sure. What were your thoughts on all of those three and anything else that you had seen?
As a Tesla owner, owning a Tesla vehicle, 200 miles charge is not going to work because the vehicle is going to be preconditioned, and that's going to take away battery. So realistically, you're probably looking at 140 to 160 miles per charge, hence the inductive charging. The thing that the vehicle is going to be on the charger, it could be practically more than it's actually out there. The range has to get up for this to actually be practical because, as you and I both know, Tesla's going to sell the vehicle to you. They're not going to operate the fleet themselves, so the mileage is going to have to get up.
That's what I was about to pounce on you about. I don't disagree that range anxiety at 200 miles is a thing. It shouldn't be, but it is a thing. That's why there's been more interest, I think, in hybrids than some of the all EVs that are out there. But maybe it's some indication that this will be a owned fleet. Maybe not necessarily owned by Tesla, although I'm sure Elon could figure out the dollars behind it. But maybe that's the implication. You still throw cold water that that's not going to happen, that these will always be privately owned cars in the Tesla world.
Privately owned. And if that model succeeds, I'll use the word if and I'll underline it and bold it, that's going to force the hand of the market. And Waymo's going to have to do a lighter version of their stack. GM and Cruise are going to have to introduce a personally autonomous vehicle, and that could usher in a whole new market. If you look back, Tesla, for all practical purposes, the United States ushered in the electric vehicle market. I can make the argument globally, they really truly ushered in that market. And on the autonomy side, Tesla has been pushing the market further and faster than anyone. Could you imagine if Tesla wasn't in the market, would we have the advancements in autonomy we have today? I say no, because Tesla's pushing the envelope further and faster than anyone, forcing the other companies to innovate and build new products.
Yeah, and maybe by having the benefit of full autonomy, where there's really no steering wheel or pedals in there, you're going to be willing to live with a 200-mile vehicle. Or maybe, look, to your point, technological advancements continue. I think the analogy here is what I've learned at SpaceX, where years ago, and I've said this on the podcast before, that the haters have indicated that like Elon would never be able to get these certain rockets up. The first rocket, the fat rocket, catching the rockets, getting the CPE equipment, meaning the stuff that's on the ground for Starlink, below $1,000. Like, the cost of the rocket itself or the reusability, all of these things. So maybe the 200 miles is what the target is for the first launch of Cybercab in a couple of years, but ultimately there's probably enough buyers for it given the functionality that it provides. And by the way, if you want bigger miles, I think the technology of full autonomy will be in your Model Y and your Model S, so you can get the larger miles there and just have to deal with having a steering wheel in it. So Tesla has basically, for the last 3 weeks, sucked up all the oxygen in the room discussing autonomy, right? This is effectively the week ahead speculation, the week of when it happened. We're talking about it again, and there's certainly reason to believe that they're making progress.
I'm going to throw a curveball at Tesla. Has the best, hands down, the best car buying experience of any vehicle I ever owned. No dealership, all done through the app. It's all done through the Tesla Lease Trust. They run your credit, they approve your credit, they tell you what your financing is. Hypothetically, in the future, what if Tesla did a 2-vehicle lease? You get your cyber cab for the kids to go to school, to go to the grocery store, and then you have a longer range Tesla part of that lease for longer, and they lease you 2 vehicles at a time. That could get very interesting.
There's a lot of different models that can exist there. But Grayson, we had beyond MKB actually asking questions, unlike those that were so intent on gushing about robots that they didn't realize that they weren't really robots in the truest sense of the word. There was some news that came from the Twitter account of a Tesla engineer. Do you want to read what that person said?
The vice president of AI software for Tesla said the following. I'm going to highlight this. There's 3 tweets here, so stay with us for a minute. It's really interesting. This is a quote unquote. Reflecting on the We Robot event, we had 19 cybercabs and 29 Model Ys drive themselves. 1,300 trips transporting over 2,000 guests. Continuous operation of over 3.5 hours, and every trip was perfectly safe. The next tweet says, end quote, "It was really amazing to see the users take the robotaxis for granted. They didn't seem to think twice before crossing in front of it, walking alongside of it, robotaxis interacting with one another, etc. They behaved just the same way they would around human-driven vehicles," end quote. Next one, full of quote. "The best part was that almost all the autonomy demonstrated was using close to the production AI software or will ship soon in V13. Quote. That to me says that Tesla's getting ready to ship FSD 13. Right now, Tesla FSD is currently in wide release of 12.5.4.1, and it performs well. I use it every day. I take my daughter to school every single day, Monday through Friday. I don't touch the wheel once. The whole car pickup line, I don't touch the wheel. Could 13 be that magical breakthrough that gets us to unsupervised? Perhaps. I still think we got a ways to go, though.
First of all, I think you were just reading like pi there. 12.5.145. So is that the increments of the updates that you get? Yeah, I mean, your belief is rooted in the incremental changes that have occurred to date. And, you know, for all we know, version 13 will be a jump function, but I will relate it this way. What they were showing was in a very controlled environment in Warner Brothers Studios, so that really doesn't prove anything. It doesn't mean that when 13 goes into your car that other than if you took your car to Warner Brothers Studio, it may still have the same concerns that you have in terms of leaving your hands off the wheel or keeping your hands off the wheel at all, which many people would suggest you not to do. It also just is reminiscent of Apple. Like, this is what companies do. Like, Apple's out there pushing AI. You and I both have the developers version. So we have where they are today, at least in AI. It's possible that when Apple finally flips the final switch, they're going to have some leapfrog improvement. Doubtful, right? I think when AI gets turned on for all these iPhones, despite all the commercials that you're seeing on television, if any of you still watch television, not going to live up to the expectations that was hyped up at WWDC. Maybe in the future, but for both companies, again, maybe in the future, maybe 13 is not the right thing. It gets back to when is the right thing, because there was a further promise, not promise, we never want to use the word promise with Elon, but there was a further discussion of your S, and which one do you have, the SY or whatever, E?
The 3, the new 3.
The 3. So if these cars are going to have it in 2025 anyway, like was also common, which we pointed last week was the most important thing to expect coming out of that event. So that's the question. Like, yeah, maybe 13 gets launched in a week on your car and you get on this podcast and you review it and say, it's great, it was an improvement, but still not quite there. When do you think you get that incremental improvement that it is quite there?
I believe they can achieve unsupervised FSD by 2030. I do not believe on the current iteration of using the vehicle every day and experiencing it that 13 will be this magical breakthrough. I believe that Tesla can get there by 2030. If FSD 13 is not this quote unquote magical breakthrough, how does the market react? Do we see a large sell-off in Tesla stock, or does this robo-taxi hype train continue?
I don't think so. I think Elon's words are heavily discounted clearly already. But, you know, that's why the stock sells off, because there's still some expectation, meaning Uber being up and Tesla being down last week, because you never know with Elon in terms of when those improvements occur. But here's a rank file employee, a shook. Just to reread that email, the best part was that almost all the autonomy demonstrated, and again, what they're demonstrating is hands off, right? There was literally no wheel, so there couldn't be any hands on. Was using close to production AI software, or will ship soon in version 13. So you have an engineer here telling you that you're wrong, Grayson. What's your response?
I'm not smarter than an engineer, and I'm not smarter than a fifth grader. I can just tell you real practical world experience from using the product. I can tell you, so you want to talk about different variations, and I'll give you pi. 12.3.6.1 handled blind left turns a lot better than 12.5.4.1. So I've seen on some software updates, major improvements, some software updates, degradation. So until I really get my hands on 13 and play with it for a good 30 days, unsure, but on 12.5.4.1, I can tell you construction zones handles it flawlessly compared to 12.3.6. So there's highs and there's lows from each update. And as I said earlier, they are going to get there. I do believe that magic number, and I'll go on the record and make a prediction, is 2030. And I'll also tell you, I will buy a cybercab / a robotaxi or whatever they call it then, because I want to play with the toys.
Yes, of course. You're always going to be nicer than I am. I'm going to go back to his first tweet where he's saying it's really amazing to see users take the robotaxis for granted. They didn't seem to think twice before crossing in front of it. I mean, if anyone that's been to CES or walked around New York City, you just see people idiotically walking in front of taxis on snowy roads. So I don't think that's really saying anything. Humans are just not necessarily smart, and that's why we have accidents. But look, it is to his credit, I guess, or just to acknowledge it. Like when I took Rich and Brandon, my partners at Lightshed, into Waymo, it was like it had already happened. And it kind of, not to go too on a tangent, it underscores the importance of getting in markets, promoting it, getting consumers in cars, and getting that consumer adoption that's going to lead to the regulatory benefits or approvals that I think really need to happen for this industry to take off.
The fastest, best way for this industry to take off is to allow the public to experience rides. Waymo by far is the leader in that, the way that they're rolling out the program just from the vast size of their fleet. But more companies, and this Waymo's included, have to do a better job of engaging the public, because when the public is on your side and they're engaged, they can put pressure on lawmakers to change the laws and put regulations in place that allows autonomy to scale. The public is your greatest advocate. Not inside baseball insiders, the public.
I mean, and I apologize to the podcast listeners for repeating this, but like, as you said that, I'm just occurring to me again, you had Warner Brothers, you had the studio, you had Tomorrowland. Let consumers walk into Tomorrowland and hop in those cars. Like, as Ashok already highlighted, you did thousands of rides, 1,300 trips, 2,000 guests. Do another 1,300 trips, do another 13 day after day. Get that kind of light bulb effect in people at Warner Brothers. Maybe set up another one somewhere else. Maybe do a deal with Comcast, who's today announced that they're going to launch Universal in mid-May, and they're on schedule for that. Maybe set up like a side thing there where you create your own partnership with Comcast and Tomorrowland. Tesla's Tomorrowland, and you assign 10 of those Tesla cars. People will wait an hour in line, right? 2 hours. How long do people wait for Soren? How long do you wait for Soren? Anyway, sorry for the digression and the repetition of what we talked about last week, but it just seems like kind of a layup for branding and to helping the overall industry.
Okay, so you mentioned Disney, so I'm going to give you a Walt Disney term that Mr. Disney coined when he was alive, when he would push his Imagineers plus it. If I'm Tesla, and it's obviously from Mr. Musk's public statements that they have a clear desire to operate a robotaxi service in California. The California regulatory environment, the way it is currently structured, will not allow Tesla to operate the robotaxi. Furthermore, if the California DMV or an act of the legislator, if signed by the governor, classifies Tesla's FSD as a level 4 system, not a level 2 system, Tesla would be forced to shut down every single FSD vehicle in the state of California. On the backside of that, the Teamsters are going scorched earth to ban all things autonomy in the state of California. That's both on the semi side and the robotaxi side. You want to talk about petty politics. Governor Newsom has vetoed 2 bills that would have effectively banned autonomous trucks in the state, and he also banned a driver-in bill, which would have ended all of autonomy in California, and Waymo would have been in, I use the term, deep doo-doo. So what does the Teamsters do? They file an ethics complaint with San Francisco that Waymo's lobbyists did not properly register to lobby the SFO airport. So what Elon could have done, he could have had 1 million plus people go through Warner Brothers over a prolonged period of time, and as part of his thing, come experience the future and call the governor and tell him we need this technology and call your local official. Okay? Now I'm going to give you precedent on that. Elon Musk is out there getting people registered to vote. You get $47 from his America PAC. Why not do the same thing for autonomy and take the power back? Now I sound like Zach Della Rocca from Rage Against the Machine. We're going to take the power back and put the Teamsters on their heels because take the power back.
You know where else there's event space? It's the great state and your home state of Florida, where again, Universal is launching a new park in May, and you have Disney. Take Tomorrowland to Florida. But I agree with you, in California, would be a great way to get support. Maybe rather than $45, you say, if you submit a letter to your local politician, you get free admission to ride at the Warner Brothers lot. You ride an autonomous vehicle. Is that legal? Can you do that? I don't know.
That's why there's lawyers. Let the lawyers figure that out, and we won't offer a statement, but it's brilliant. And Epic actually, not to go on the Comcast side, but Epic through Universal has looked at incorporating autonomy to connect the parks. I don't know when that's going to happen, but they've been down that road.
I'm not even saying use it for the guests, like literally create it as a Tomorrowland type feature as phase 1, and then phase 2, depending on how the park is laid out, you can have them transport. I mean, look, I met some companies on the West Coast last week that have me rethinking how mass transportation should be done, meaning that like you have these bus lanes in New York City that you see buses go by. A lot of times they're full. That's very efficient. Trains, obviously, from Westchester into New York, very efficient. But then there's some times when they're just empty. And, if you're getting the cost down of electric vehicles with specific routes and you've got these lanes set aside, you have to rethink how to move a lot of people. And maybe it's not large buses. Maybe it's smaller autonomous vehicles that are utilizing the infrastructure of the lanes that already exist, the bus lanes. You're just turning them into smaller vehicles. Thoughts?
It goes back to what we've talked about on several podcasts. Consumers do not want to share. They want their own, we're going to call it a comfort pod. They want their own comfort pod, and they want to break away and go to different destinations. Consumers ultimately want point-to-point destination. They don't want stop-to-stop. That's not truly what the consumer wants at the end of the day.
And there's companies out there. A good buddy of mine, Gokul Hamadi, who's now the CEO of Glideways, just raised a ton of money. Not only are they pursuing this concept, but doing it with smaller vehicles, really optimizing the cost per vehicle and then optimizing algos to deal with how these smaller vehicles are coming on and off. It sounded crazy when I first heard it, but then the more I considered it and did some more work on it, and I think actually Chris Urmson might have mentioned it this week on a different podcast, same type of concept, just rethinking, how we're using autonomy. It has to be done, and certainly regulators can play an important role in that.
The interesting part on Glideways, I believe, and I'll have to fact check this, that Cascade Investments, Bill Gates' investment vehicle, is an investor in that, and I know for a fact that the first deployment is going to be the San Jose airport. That will be really interesting because you know this from our experiences at Kennedy. It's horrible trying to get an Uber or Lyft. I'd much rather get in a Glideways pod and go somewhere. It's much more convenient.
Absolutely. And look, there's going to be incremental infrastructure investments that are made, but there's companies that are willing to do that. And the cost of those, it was a bid, right? It wasn't like some random pet project that some politician got behind. They were bidding against train companies that were going to put massive elevated infrastructure. So the promise of it is large. Again, it's just about getting smart people to rethink how we do things and how that leverages autonomy. And by the way, reflective of capital coming into the space, which is a good segue into our next topic, because we've had some positive movements that underscore why this podcast even exists. In our 7th episode, it's the cross-section of autonomy in the capital markets, possible IPOs that were just discussed this week. Horizon Robotics, I think they have existing investors, VW and Intel, talking about a Hong Kong exchange IPO where Alibaba and Baidu would be participating, raising $700 million massive dollars. I think it said this is going to be the largest IPO, but forget largest IPO, just getting IPOs going and in autonomy of all things. Certainly notable. And then, of course, Pony.ai in the US, Toyota and NEOM, which is obviously the whole Saudi Arabia project, as investors. Also, I think there was some reports at least that they're planning to file an IPO to raise $300 million. So obviously, very, very notable. What do you know about either of these companies that you can share with our public investors?
Bloomberg has been covering the Pony IPO now about 18 months. This is, I believe, their third time. You have to fact check that with Bloomberg, their third time around filing for an IPO. The last Bloomberg report cited the New York Stock Exchange, which I believe in YSE. The Hong Kong exchange, I'm not surprised that Horizon Robotics is focusing on the Hong Kong exchange. Perhaps it's because of liquidity that you cannot get on the Shanghai exchange, since Horizon Robotics is only focused on the Chinese market. Overall, if you combine it, you're looking at $1 billion that's US billion dollars. It's very positive for the markets. How the markets are going to react when these companies are ultimately traded is yet to be seen. I've been very fortunate to go for rides in the Pony.ai vehicles in their Fremont, California facility. And I will say the vehicle was impressive. It's come a long way since they hosted me 6-7 years ago to when I was there a couple weeks ago and went for a ride. The vehicle is very smooth. It handles uncontrolled environments such as a parking lot in a grocery store flawlessly, handles a loading dock. The Pony AI tech, I'll say it point blank, it impressed me. It's really, really good. Whether that really, really good tech can translate to a business model, I don't know. I do know that Pony does have a very successful business, both on commercial trucking and autonomous vehicles, robotaxis running in China. And Pony.ai is now operating fully autonomous, the largest fleet of autonomous trucks in the world in China, but they're operating and the tech is working. So it'll be really interesting to see if any of the geopolitics come in and perhaps burden the IPO that they are filing for.
Yeah, that'll be fascinating. I'm definitely looking forward to diving into those numbers. What is the target market of Pony.ai? Is it moving people? Is it robotaxi fleets? Is it trucks? What are they going after that you're aware of?
The target market is two there. Currently in China, they operate a robotaxi service, and they also operate a commercial trucking service very similar to Aurora. I would say if you're looking to a US-based company, the closest thing in terms of a business model perspective would be Aurora, where they have the vehicle business and they also have the Class 8 truck business. I believe, I do not have any data to back this up, it's just all based on publicly available data, that Pony will primarily 99.9% operate in the China market, perhaps into some other Asian countries. I view their Fremont facility, which I have visited, as purely as an R&D facility, and I do not see at this time Pony.ai running a service here. But I will caveat that and said that years ago in Irvine, California, Pony.ai, in partnership with Hyundai, did run a service in Southern California, but I believe going forward, as the company evolves and matures, it'll be a pure China-based company.
I mean, if NEOM's an investor, obviously they're going to be looking to deploy those products in Saudi Arabia as well, for sure.
But there was a report in the Financial Times today, the Crown Prince MBS is cutting spending. So perhaps the NEOM project doesn't go forward. Justin Hibachi, who is the former CEO of LAX, Los Angeles World Airports, he went to Saudi Arabia to run the NEOM airport. He recently resigned from his position, so we're starting to see some pretty big overturn at NEOM.
Yeah, we'll see. I think that one's going to happen. we will see how that evolves for sure. So that's great in terms of new stuff to talk about. Hopefully they're successful. We'll see. Those are big numbers. That's big capital to raise. Obviously the market's been strong, but we'll need to see if that can transfer over to public IPOs, which has not necessarily been great up to this point.
Then does that translate and open the doors perhaps for the private markets? If these IPOs are successful, do investors look for the next emerging batch of autonomous driving companies to invest in pre-IPO?
Yeah, I mean, I think that's to a certain extent happening anyway. I mean, I think capital is going to flow to ideas that are good, especially if people can see the market opportunities that exist. The question, though, is no one's necessarily cashing out. These are strategic investors, VW, Intel, and Toyota. They're not cashing out. They're not taking those dollars. Well, maybe they are. Maybe they, as strategic investors, are reinvesting in some other private autonomy companies out there. So I think it's possible. But I think it's just overall, you want to see success in the market with something, just so you say, okay, when you're evaluating a new investment at whatever level, growth stage, you can say, well, we've had a successful IPO of these two companies. It's established a market, and it makes it easier for sure.
Then you have Aurora that's publicly traded. I believe they're up 44% year to date. They've had a successful run, and perhaps more companies join them. But if you look at the next batch that are, if you consider close to getting ready to go, I do not see a US-based IPO of any autonomous driving company for at least the next 18 to 24 months, just based on where they are in the business.
Yeah, we'll see. We'll see. Things can happen. Things happen slow and then they happen very fast. Now, there was other news in the public markets this week and today that kind of shook people up. Not quite autonomy, but I think it speaks to what's going on in our space. But there was a Financial Times report saying that Dara, the CEO of Uber, had taken a look at purchasing Expedia.
Is he going home? He was CEO from 2005 to 2017. He currently sits as a non-executive board director. So I have two questions. One, is Dara going home, or is this Mr. Barry Diller trying to play deal maker?
I think there's been some good reporting. I mean, usually I rely on David Faber's pretty solid with stuff. In this case, Deirdre Bosa, also of CNBC, came with some interesting details, basically saying like, Dara was asked to take a look at this, I think by a shareholder. Maybe Barry was the shareholder, maybe he wasn't. Didn't really go further than that. I mean, the fact that it leaked is probably some banker or someone basically saying like, hey, maybe things aren't going so great at Expedia. We want to kind of advertise that we're for sale and that there's really cool companies that are looking at us. So come and buy us quick before we actually have to report the quarter or see our business otherwise erode and travel. But I think the way these things happen, and we talked a little bit about this last week, Grayson, about the personalities of CEOs and how it leads to good deals and bad deals. But it also is just, this is how the world works. Like, hey, do you mind looking at this company? Sure. I used to run it. I have an expert. Maybe it fits in my overall large kind of mega app that I want to get to. So I'll take a look. But I wouldn't think it's anything larger than that. I certainly don't think it was, and don't know one way or another, but don't think it was Dara reaching out to Expedia saying like, oh, the stock's trading off. I know this company and this would fit great within Uber. I think it was more the opposite. It was an inbound that he would say, okay, yeah, of course we'll take a look because I'm going to do you a solid.
There's all this talk around super apps, but we saw, and this goes back to Meta, I'm going to call it the great unbundling, where everything started getting unbundled and getting its own app. Does the US consumer even want a super app where everything's bundled together, or are they going to continue to follow the Zuckerberg route of unbundling and using different services that are specialized in different parts of the travel spectrum?
So, and I would suggest users flip over to the Lightshed podcast, where my partner Rich Greenfield is kind of the expert in this, but we view the concept of the super app as time spent, meaning the reason you want to add things more in whatever app you are, whether it's Uber or Amazon or whatever, is to get someone in your ecosystem, feeding them videos or God knows what else, so that you can sell them stuff. You have more hours per day selling them stuff than someone else. And that's ultimately what the concept of a super app is. It's time spent. And by the way, Grayson, so there is time spent in the app, but there's also time spent in the car. And I think where this kind of fits again, and if you look at the long term, where autonomy, what we're rooted in as a podcast, if this becomes a larger and larger percentage of the rides that are out there, it's not just the time spent in the app. It's do I have a fleet where I have screens and experiences that are in those cars where I have access to that customer in a very closed environment, clearly, right? You're closed in the car, that they only see your stuff as opposed to other things. And I think that is perhaps the larger picture here. That's not something Expedia necessarily enables you to do. I think it's more of like, okay, maybe you get more data. You could probably rebuild what Expedia does anyway, but it's a time spent issue, Grayson. And I'd be interested in your views on how time spent can evolve in the future for Uber in app or in car, and then just more broadly for the autonomous industry.
It's a vertically integrated upsell from an experience standpoint, but going back to the Disney Plus reference, I could imagine a world where you're on a commercial flight, you land, the app automatically knows, okay, whilst off the plane, it takes 12 minutes to go from the gate to the door, and then you get a notification in about 5 minutes into your walk, well, your car is spot A2, and you get right in there and you go on your journey. And then as you're going on your journey, perhaps you're going to a hotel, then it automatically notifies the hotel, okay, ETA is 45 minutes, Walt will be there in 45 minutes. And you have this consistent experience and eliminating friction. Because that comes into the data sharing. If you really look at the hospitality industry and the way that hotels are built, it's all built on RevPAR, stands for revenue per available room. One of the greatest operators, in my opinion, privately held is Shanghai Hotel Holdings, which controls and owns the Peninsula brand, where they have something which they perfected to an absolute science called Peninsula Time, where there's no check-in time and no checkout time because they optimize the rooms that way. And what if you took Peninsula Time, through all the data Uber's going to have, because they're going to know when you're staying, where you're leaving, what your flights are, your vehicles. They can optimize RevPAR. And if they can optimize RevPAR for hotels, they can get a higher booking fee than Expedia is getting today, which could then drive more dollars to the bottom line, profitable dollars, I might add. And then for you as a consumer, I'm sorry, sir, you can't check into 4 o'clock. The dreaded, I can't check in, the dreaded, you have to check out. That all goes away because everything becomes fully optimized. Perhaps Uber's not the transportation app. Perhaps it becomes the optimization app.
You went a lot of different directions, but I would kind of bring it down to, hey, I'm Dara. I'm making investments in AI for my own business. And the way I leverage this is, again, making your experience better. It goes down to like, hey, I don't want you waiting 10 minutes for my car. I want you waiting 3 minutes. I don't want you waiting 15 minutes to check in. I want you waiting 3. As I'm saving you time, you're staying in my ecosystem. So, there's all those different ways for sure that you book it. But then there's also what I think a lot of these companies are talking more is like, now while I have you there, and I'm making your life better and you're paying me higher commission rates for it, how do I also leverage you on the ad side of things? Because if it's a competitive market and a lot of those things that you think booking fees or whatever get compressed, I got to find other ways to pay for it. And advertising has always been the easy lean on in terms of monetizing product, as obviously Facebook has done exceptionally well.
And it's highly, highly targeted advertising with intent to purchase. And as you know from your partners at Lightshed, you're getting a higher CPM for that intent.
Sure.
And that becomes really, really interesting. But is now the right time for Uber to even explore an acquisition? It seems that the business is starting to really scale at the end of the year. Uber Freight will be operating autonomously with Aurora from Dallas to Houston. The Waymo partnerships are ramping up and they're becoming the platform for autonomy. They're really streamlining the business. I just don't know if a big bulky acquisition now is the right time.
Well, look, I have to be fair, right? Meaning that if we just said that maybe the reason Expedia wants to sell is because they have quarterly issues, sometimes the reason companies want to buy is to find new avenues of growth. And if you have a stock that's done exceptionally well recently, you've generated free cash flow, you've gained exceptional credibility with the investor community, you have people thinking of some larger picture where you can tell tales, right, and have people buy in. So credibility means that you can make investments for growth that may not happen for 3 or 4 years. Uber's probably at that point. So yeah, you do kind of open yourself up to maybe making acquisitions or large strategic partnerships that can give you that next growth phase. And yeah, if your stock's down 3% on a day, does it really matter if you have your believers that think that this can be the next leg of growth? And then if some of your regular way growth, meaning your existing riders, start to moderate a little bit for whatever reason, maybe the economy is a little weaker, at least you have this other story now, this narrative to address that keeps investors excited about the company and keeps the stock up. Case in point, Apple. iPhone growth down, create the story of AI. You've certainly built up well-deserved credibility that you're ultimately going to get there. So even if the super cycle doesn't happen this quarter, the narrative will say, well, it's a 3-year super cycle and you've earned that credibility to invest in AI and to get there and to be perceived as the beneficiary, even if nothing happens in the near term. So Dara, like any CEO, has the opportunity. Like you either develop from within or you kind of leapfrog into spaces. You grab companies that maybe have a certain amount of data, a different vertical or whatever it is. The other thing that happens, Grayson, is once there's even speculation that a company is going to make a move, their competitors and the board rushes to the whiteboard and says, what do we do? So, and in this case, we've always talked about Lyft is like, when are they going to do autonomous deals? So let's say the Lyft's board all of a sudden sees that Dara might buy Expedia. What's going on in the boardroom at Lyft right now?
I'm shopping for a partner. I'm putting myself up for sale because there's no way that you're going to compete. So I'm reaching out to Booking Holdings. I'm reaching out to Airbnb. And my first call would be Airbnb, and I'll give you some numbers. So Lyft has a current market cap of $5.44 billion. Airbnb currently has $11.25 billion on cash. They had a free cash flow last quarter of $1 billion. So they obviously have the balance sheet to do it. They have the ability to raise debt to do it. And let's go back in the Wayback Machine here, because in 2019, Airbnb hired Fred Reed. He was the former CEO of Virgin America, a great airline when it existed before Alaska bought it and didn't want to pay Branson his royalty rights. They hired him to build the Airbnb transportation division. So Airbnb has a history of looking at transportation. Brian Chesky has a history of publicly talking about what transportation could look like if Airbnb got involved. Could Airbnb and Lyft come together and be more of a direct competitor to Uber if this deal went through? Or does Booking Holdings go for it? That's the question.
I mean, normally, Grayson, I would be like, this is another one of those Grayson crazy things, which I love you for, because you are the visionary, and I'm more of like, I don't want to say pessimist, skeptic, let's call it. You are the Elon, and I'm the more Takendra Malawi from co-CEO of. But I'm gonna hat tip you on this one, because on the Lightshed podcast, Brandon Ross, when we were talking about the Tesla event, said it sounded a lot like Airbnb in terms of the use of the cars for a certain price. Now, I chided him saying, like, you'd rather give someone your apartment for $5,000 a week than you would at 1 o'clock in the morning for $40 an hour, picking up some drunk person. But look, for Airbnb, brand, very consumer focused, not crazy, but I would just up the ante on you on that one and be like, they're going to compete with, or maybe even bring a third party here, which is the autonomous company, which brings us back home to the root of this podcast, autonomy, meaning that Lyft has got obviously potentially tremendous value to a Waymo or a Zoox or whoever, and maybe Lyft is the third party in that, if depending on who ends up being the kingmaker here. And for years, I'm going to put Walt Telco Corner hat on. Again, this seems like a non sequitur, but I'm going to connect it. T-Mobile was going to be the kingmaker for cable, meaning that whoever bought T-Mobile, whether it was Comcast or Charter or whoever, they were going to be the next big thing, because T-Mobile was the emerging one. Now it's the opposite. Now we're talking about whether T-Mobile is going to be the one buying Charter. So all of these companies have tremendous opportunities in front of them. Lyft, Waymo, Zoox, obviously within larger companies, Airbnb, consumer focused, all of them. It'll be interesting, and maybe that sets up a world of partnerships or perhaps ownerships.
So the two R's, Risher and Rutledge. Rutledge, would he ever sell Charter? And would Risher ever sell Lyft this earlier in his tenure? Those are two big questions. I got the R&R.
I 100% think Rutledge would, for sure. I think he realizes the pickle that they're in. Risher, on the other hand, I mean, that would be a pretty, I mean, depending on the price, right? That's not a terrible outcome for him. It's not like he's the founder of the company, right? He came in and did some stuff. So, it's possible. The question always becomes, who's the president? Who's the regulators? What's doable? What's not? To me, if it strengthens the competitive market for rideshare, that's a positive. 100% a positive, but like logic doesn't always apply to regulators.
We could have a new regulatory regime. And here's another thing. If you look at the Airbnb front of adding autonomy. So Airbnb hypothetically acquires Lyft and they get an autonomy partner. And let's go back to the original mandate that Fred Reed had in 2019. One of Mr. Reed's goals was to improve the transportation experience for everyone by exploring a range of ideas and partnerships. That's arranged. And then Airbnb incorporates autonomy. And then they take their experiences platform and they layer experiences on it. So if you want to go to a bespoke sushi place, or do you want to go learn how to make honey from bees? Well, the autonomous vehicle will take you there. They become the super app for travel. That gets very interesting.
I love your vision. And, I can see some industrial logic, some strategic logic in it. And, let's see. They have the type of CEOs that I do think, think big in that regard. So we'll see. I just think in Lyft's case, if we believe that the app and the algo are important, they become an important element as autonomous companies come up and they're ready to stop having to partner with Uber, who's the dominant player in the market. Do they just outright buy Lyft? The challenge with that is the government's going to look at that and be like, well, then all the other autonomous companies, their only option is to partner with Uber. They'd rather have multiple partners available. So that potentially becomes a regulatory issue depending on who's in office. But we can think big. You never know how things happen.
I'll give you another one thinking big. If you look at a company with multiple autonomy partners, Walmart, they had Argo, they have Cruise, they have Waymo. What if Walmart bought Lyft, integrated it into Lyft Plus? Obviously, they can easily swallow it, because Walmart was one of the finalists to buy Zoox before Amazon. So they have a clear desire for autonomy. And they designed certain stores for drop-off and pickup zones for autonomous vehicles. They had the Walmart grocery delivery. So that could get very, very interesting if Walmart truly decides to go into it. Because if you look at different verticals where Walmart's going into, Walmart's now building, led by James Reed, they're building a digital freight brokerage to compete with Uber Freight. So connecting it back to Uber. So does Walmart buy that little piece and say, okay, Uber, guess what? Your friends in Bentonville are now competing with you out in San Francisco.
Great American company, technology forward company. Stock is up 55%, 54% year to date. Life is good. Life is good for them. This would be a major type of strategy shift. It's hard to see when life is good for companies that, as much as they invest in tech and all of those things that you said are 100% true. Again, it gets down to personalities. Not sure that they're in the mindset of upsetting the apple cart. The apple cart's pretty goddamn good right now.
It is, but Walmart's in the business of rolling back prices. They acquire Lyft. Their slogan is rolling back prices, put pricing pressure on Uber. There's a lot of things that are happening in the market as we look to next week. We got Tesla earnings on deck. We're going to break that down.
3 weeks, and now we're going to extend it a fourth week. I think Elon does a great job, and the election's coming up, so we'll hear from Elon even more. So for good reason, he will dominate the conversation on this podcast for some time, and there's certainly at some point in the next couple of weeks, Lyft is going to report. We'll see what they have to say, and looking for more updates from the privately owned autonomy companies as well.
As the earnings report, we'll break them down. As the news comes out of the private markets, we'll break it down, because the future is bright, the future is autonomous, the future is deals and partnerships. Until next week.